A very good morning and welcome to the Financial Source Daily Macro Sentiment Session. Good morning, Judith. Good to see you. Hope you're doing well. Hey, Mark, Mike, Ruby. Hey, good morning, Ruby. Was thinking about you yesterday. You were spot on with your May Day holiday and intervention with Japan. What a good point. We'll cover that, and we need to give Ruby a round of applause for some very good foresight. Hey, Adnan, Mark. And we got another round of applause for Mark as well, who took advantage of that dollar yen short, getting in very nicely, very tightly, making a nice healthy move on the downside. So we've got some good news to share. Plus, obviously unpacking the ECB and the Bank of England decision. We'll have a look at the euro pound setup we discussed yesterday, recap on the Dow and oil, and a little lesson on the dollar yen. There's a lot to go through. Um, Now, for those of you who are joining us from LAT, very good morning to you. It's nice to have you with us. So I want to give you a little introduction as to what we're doing here. There's five core elements to good trading. First, trading psychology, always asking yourself, should I be trading right now? Secondly, we believe it's very helpful to know the macro fundamentals. Thirdly, also understanding the current sentiment for a day trade or a swing trade. And sometimes that means recognizing there's no clear bias. Fourthly, we look at technical execution. We want to keep entries simple, repeatable. We want to minimize risk as far as possible. And fifth, obviously, it's risk management, position size, stops, and knowing your downside before you enter. There's no point, having 10 great trades and then your 11th trade ruins your whole account because you're over leveraged. So risk management is very important, right? Now, what we focus on in these sessions is elements two and three, helping you to build a directional bias based on the macro fundamentals and the sentiment, whether that's FX, indices, metals, crypto. In one sense, it doesn't matter. Now, if you are brand new, we highly recommend that you go through our macro course here, which, and I'm not just saying this, I think this is one of the best courses that I've ever come across on understanding macros from the ground up, right? It is 90 plus videos and it goes through all the different economic indicators, what they mean, central bank policy, how that impacts FX markets, how that flows through to the bond market, and then how all the different interrelated markets work, bonds, commodity, FX, and then how to find opportunities. And essentially, it all boils down to three core principles. And once you know these three core principles, all you're doing is you're repeating this same system over and over again. So first of all, you want to know what is the baseline that's expected, what will be the surprise, and then has it changed the big picture? That's it. Um, and that's a sort of a principle that we go through over and over again. Now, in terms of daily preparation, we go through a few key things every day. So first of all, we'll have a look at the news feed and the news squawk. So the news squawk here will just talk out breaking news as it happens. And of course, that's very helpful with the Iranian war going on between US and Iran. Then we look at the economic calendar. Very helpful because not only does it tell us when the data points are coming out, but it tells us what's expected in terms of the high and the low. Many calendars don't have this. And what this is a collection of economists' projections regarding whether the expected data point, the full range. So that means it's easy to see if it's a surprise. If it's expected at 53, if it goes at 47.5, that surprised all economists, right? So that's what's helpful about this calendar. We also have an interest rate tracker, again, incredibly helpful because it shows us when interest rate expectations change. So you can see here, right? Um, Expectations have changed for the Bank of England in terms of interest rate hikes, you see, versus yesterday, right? So you can see that was seen as a hawkish decision yesterday. We also look at the implied volatility tracker. Um, where is it? and this can find decent turning points in the options market, can be very helpful. Okay, particularly if you were looking at technical based trades. And that's essentially what we're doing. Now, let's move into today's session. So the first thing we want to do is see what's the current sentiment. And the best way of seeing what the current sentiment is just look at the daily European opening news. And what you have here is you have the major headlines, right? So we have another earnings report out. We've had the big tech names reporting this week, Amazon, Google, Alphabet, Meta, and Apple, right? So all the big tech names have beaten on their top line, on their revenue and their earnings per share. So pretty decent um, earnings results, which keeps that AI trade moving higher in the very near term. There's no obvious worries from the earnings reports. We have the latest on President Trump saying Iran's dying to make a deal. We'll cover that a little bit as well. And we can see the US is going to allow Israel to target Iran's energy facilities if negotiations fail. So we can see there's a little bit of an escalation developing here. Um, when we go and have a look at the FX specific trade, what we can see, obviously, the yen is having a big impact on the Dixie with that intervention. And Ruby here was very prescient in seeing the likelihood of the Bank of Japan intervening over that holiday period. And we explained yesterday why there was a lot of credence to what Ruby was saying, which is when you have holiday thin trading, it can really exacerbate moves. So that was very clever from the Bank of Japan because it means they can get the maximum amount of moves for the minimum amount of effort. So it was very deliberate. A star Ruby who saw that coming and put that all together. Yeah. And also, what I did see is that there's in the commodity market, there was some talk that maybe Japan had been intervening in the energy market as well. Um, Now, reason that's important is because there's pressure, the higher energy prices are, the more pressures on Japan. Because when the yen is weak, that's great for their exporters, but it's annoying for domestic importers and domestic industry. It means their energy costs are even higher because they've not only got high oil prices, and remember they import, they're net importer of energy, big importers of oil, but the weak yen makes it even more expensive. So there was real pressure. And of course, the central bank wants to facilitate as far as it can its domestic economy. So, another factor that was putting pressure on them. So, just a little lesson here with the dollar yen. If so, looking at that, here was the move in the dollar yen. Now, I know Mark got in with a very, what level did you get in, Mark, if you were around? Um, with just a few points stop, got in a lovely position. Look, and it's run 160 down to 155.50. Beautiful little move, right? This is the great, if you have sort of automatic entry software, that's the sort of thing to use on these kinds of events. And say you even missed it, right? Notice that you got another uh, crack at it today with this rising kind of wedge strike flag pattern. So you can see here, you got this sharp drop, you got this pullback on the 15-minute chart, price breaking out on balance volume moving lower, and obvious entry was here at the 157, and they just targeted like the lows, like 150 points, right? Just down there like that. So today, like now, really, what I'd expect is this to start bottoming today and to start moving its way up. The fundamental pressure pushing the dollar yen higher has not gone away, right? It's still there. So just be careful that we might begin to see this. Yeah, so 160. Hey, nice one, Mark. So Mark got in at 160.40. which is here underneath that swing point there. What a lovely little move. So Mark got 160.40 and right, right. That's got to be a round of applause there. Yeah, yeah, fair. Mark, you know what I mean? Yeah, but hey, that's a cool 400 plus points in, what is it? Couple of hours. Great stuff. And of course, that is why we were saying yesterday, do not be short the yen because the risk of that intervention is high. So this is kind of the line in the sand, this 159, 160 area. Um, so right, any rallies up to there, you'd expect sellers. But we may very well see rallying back up to that 159, 1560 today. So just be aware of that. There's pressure for that to move higher. And that kind of flag broken. So I'll be neutral the dollar yen now, right? Because you could easily see sort of a bit of a push higher. Now, we also had the ECB and the Bank of England meet yesterday. Now, with the interest rate decision, um, it was billed as slightly more hawkish. I don't really think it is, but you've got this element here where Pill voted for a hike, but you can see that the consensus was one person would vote for a hike. High was that two, and we had one. Is that really hawkish? Yes, it's a change from last time when not nine voted for a hold, no one voted for a hike. But this time, eight voted for unchanged and one for a hike. That's Pill. So, in other words, Bank of England needs to raise interest rates to deal with the inflation pressure from the US-Iran war. Um, but that was expected. So I don't really see that as much as perhaps is being touted. But if you look at, and this is where the interest rate tracker is really helpful. If you look at the where is it, interest rate tracker, you can see that short-term interest rate markets have moved from yesterday. And look, they now see two more than two interest rate hikes this year. And Bank of England's Bailey was kind of agreeing with that sort of more hawkish stance from the short-term interest rate market. And the problem is there's lots of uncertainty. How long does the US-Iran conflict go on? But either way, there's a clear shift, right? The ECB has had less of a shift higher because the June interest rate hike is still pretty much being expected. So that was a bit more of a shift from the Bank of England relative to the ECB. Um, we had here, look, this euro pound, right? Coiling price action. Um, and we were looking for a potential break to the downside or to the upside, right? And you can see that was got a nice break to the downside. Um, did anyone catch that move yesterday on the decision? Very nice move, just broking with the ECB decision and the Bank of England decision, and we just broke lower there. Um, Now, I'm not expecting that to continue, but you know, we can't deny what we're seeing. And that is a clear break. We are in this big support level down here now. So not bad area to take profit or take, 50% off of something if you like taking a position. That's not a bad area for profit taking stroke, take 50% off in case you have another attempt a bit lower. But that was a nice move on the euro pound. But has it really changed the out? If you look at the yield spread, there is a dip down in the yield spread here, coming down lower. So short-term interest rate markets are seeing a little bit of a shift here. So there's no reason for euro pound longs at the moment. Even though I'm expecting this to come back, I want to see some reversal price action and a move in the yield spread. Now, the other little trade we were looking at, and I wanted earlier this week, was the uh, break of the Dow on the Federal Reserve interest rate decision on Wednesday, right? And we can see that was a lovely little move again, and we were looking for a move of around 1.5% from the center of the range based
It's
on the
reporting via Bloomberg that BOJ data does point to FX intervention of around 5.4 trillion yen. For clarity, that's in reference to the moves we saw yesterday, not the moves this morning.
Okay, that's just confirming it was a FX intervention from Japan. Um, and you can see here, right, nice coiling price action breakout, and we hit profit about of that 1.5% target, which was based on historical volatility. And that was based on the Dow. Dun, 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 dun. And if you look at the events, Fed meeting, you can see that on the day of the event, let's look over the last 5 years, just make it down a little bit easier. You can see that when you got a fall of 1.5%, right, that's kind of your, a decent drop. Anything over, 2% was an outlier. You can see here greater than 2% outlier to the upside, outlier to the, so a 1.5% drop or 1.5% gain was a reasonable area for looking for profit taking on the actual day of the event. So what we were noting is with this coiling price action, a fall of about 1.5% would be a decent target. And you can see here that on that day, um, there was a drop of about 1.10 and then a little bit of a follow through overnight before a retracement. And in total, there was that sort of at 1.5% area here. Um, Now, what we're looking for here, right, for today is this headline that's beginning to get markets' attention. Um, where is it? Here. Remember, we're waiting for some kind of reaction from the US on what they're going to do about Iran. Now, Iran's trying to delay, keep the Strait blocked for as long as possible because it's leverage in negotiations for their nuclear deal. They want to keep their nuclear weapons. The US wants to stop them having nuclear weapons. So we're reaching a deadlock. And what's being expected now is an escalation. And you can see that oil prices are the canary in the coal mine for that escalation risk. And you can see here, right, that oil markets have been pushing higher. We looking at sort of various flag patterns. We looked at this flag pattern here breaking out in oil earlier in the week. Based on that, where is it? Let's just find it here. We were looking at this flag pattern on Wednesday, again breaking out on the straits being blocked. We were looking for a potential break of this trend line here yesterday. You can see we're trying to hold above it. So really what we're looking for here for today is a further escalation. Oh, was it that one, Najam? Which one? 215. Yeah, okay, let's have a look. Yeah, got it, yeah. Yes, no, yeah, I remember at the time, Najam, you were saying you were caught up with other things. Yeah, a great one, wasn't it? Lovely. Look at that. Nice flag. And this is a good example because we were looking at this at the session. It's when you get the macro driving news, right, and price shifts up. You think, well, how do I get into it? The flag pattern, high tight flag pattern, is one of the best ways of getting into it. And then you have a breakout of the pattern on balance volume pushing higher, and then you target the height of the pattern. So the target would be there up to that 107. Right? And you can see price actually moved up, hit target very nicely within the actual session. So there's nothing cl as clear as that now. What I'll be looking for is escalation, price moving up, and then look for the same kind of structure and go along. Just like we was, as the trouble was building, early on Wednesday morning, right, you had this other flag pattern which broke out, right, which was another flag pattern which broke out, and even another flag pattern really that broke, right? You see, you're getting these series of flag patterns. Now we're consolidating, but escalation is expected. So what I'd say today is if you suddenly see the escalation happening, then go to the 15 or even drop down to the 5 minute, right, and try a flag pattern. If you get, so you're looking for a spike, pull back against trend, and then go long. In terms of data, it's all going to be subservient to what's going on. It's today for me, it's all about what's going on with the US and how they're going to respond to Iran. Um, you look at the contradictory positioning from Iran, from Trump, right? And it's not because Trump's mad. It's a very deliberate reason. He has to say to the markets that this conflict is going to be over in a few days. To reassure them. And you can see that that's worked for equity markets, and equity markets have taken, Trump's word, the so-called taco trade. Trump always chickens out, and they said, yeah, okay, fine, we accept you're going to end it, right? And stocks have been rising. But to Iran, he has to say, we're going to carry on this conflict forever. So that's why he's saying you're getting all these contradictory statements out all the time, like this. Iran's dying to make a deal, but they can't have nuclear weapons. And then he says a deal may not be necessary. Then said a deal might be needed. Right? This is essentially what Trump's going to keep doing, this contradictory messaging. So if there's boots on the ground, so say there's a land invasion for the Straits of Hormuz from the US, then look for downside in equity markets. Look for upside. I think oil could be complicated because you're going to get, in one sense, you could see Iran's oil selling off if the market thinks that it's going to be successful. But if Iran launches retaliatory maneuvers, particularly against oil infrastructure in response to a US land invasion, then that could easily see oil markets spike. So what I'd say is don't go with the headline, right? Just wait for the reaction and then use a high tight flag pattern to get in. Yeah. The economic data that we've got coming up for the US, that should be just consumed within the US Iran headlines. So escalation, Straits blocked for longer, than look for oil upside. So for me, I really just be looking at oil today. And I'm going to leave the rest and then come back next week. Folks, been a good week. Congratulations on some great trades. I think the macro award of the month goes to Ruby for putting together. It's worth listening to the recording if you want to see Ruby's comments. The way she put it together was really good on the Bank of Japan intervention, and it was a holiday taking place in Japan. And Ruby recognized that that might be a great low liquidity session for intervention, and she was spot on. So brilliant, 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 brilliant. Yeah, well done, guys. It's absolutely. And thank you for sharing, Ruby. Great. That's why there's lovely things about these ideas. Um, it's collectively that we're getting all these insights, whether it's from the flagman, that's Najam, or Ruby's insights, and it's a pleasure to be with you all. Okay, folks, that's it today. I hope you all have a very good weekend. Yeah, thank you. You too. I'll see you later, Najam. Julia, Ruby, take care, everybody. Judith, Ryan, Peter, Krista, yeah, Anna Maria. Goodbye. Thanks now.